The minutes have been sent out for the February 5th, 19th, 28th, March 4th, and March 6th meetings. Has everybody had a chance to review those minutes and are there any corrections? Seeing none, is there any objection to accepting the minutes? Seeing no objection, the minutes are approved. We're going to change some order today here. We're actually going to end up working HB 2739, but in order to get there, what we're going to do is actually take the contents of 2739 and attempt to stick them in the contents of SB 37. So what we're going to do is we're going to bring up SB 37. David's just going to give us a real quick overview of what SB 37 does currently. I will say SB 37 was included last year in a CCR, a conference committee report, the contents of that, and it was passed into law. So it's kind of just an empty bill sitting in our committee now. So we'll turn it over to David for just a quick overview.
Thank you, Mr. Chairman. Yes, Senate Bill 37. This was the bill that would expand the transferability of tax credits allowed under the Kansas Housing Investor Tax Credit Act that was enacted back in 2022. It would the bill would provide more flexibility to taxpayer one to transfer the tax credit. Under the bill, the taxpayer could transfer all or a portion of the tax credit amount to another taxpayer. Additionally, a transferee receiving the transfer tax credit, whether all or a portion, could make a subsequent transfer of all or a portion of the amount to another taxpayer. And it would keep the current requirement that the tax credit must be claimed within the first 5 years after it was issued. And as the chair indicated, the contents of this bill were passed as part of Senate Bill 34 last session.
Thank you for that, David. Committee, are there any questions for David on that? Seeing none, do I have any amendments on SB 37? Mr. Vice Chair Clifford.
Mr. Chairman, I move to strike the language in Senate Bill 37 in its entirety and insert the language of House Bill 2739 in its entirety in its place.
Do I have a second? Representative Getz seconds that. Committee, is there any questions or discussion on that amendment? Seeing none, Representative Vice Chair, you may close.
Mr. Chairman, just for the informationally, this was heard on Monday, March 4th. Mr. Chairman, I close.
Thank you. Committee, you've heard the motion. All in favor, aye.
Aye.
All opposed? Motion passes. Now that the contents of HB 2739, which is the Foreign Adversary Divestment Bill, is in SB 37, I do have a amendment that I would like to offer. And we do have some paper copies of the amendment too, if folks did not bring their computer today. Just raise your hand if you would like a paper copy and we will get those to you. While the amendments getting sent out digitally and passed out here, this is just a balloon amendment. I got a second here from Vice Chair Clifford. This is just a balloon amendment that incorporates some of the language with the concerns we heard from Capers. They had in their testimony changing, I think it's on page 3, changing the affiliated with to a person owned or controlled by us or subject to the jurisdiction of. That was a request from Capers. Another one with the testimony, so the neutral testimony, changing the phrase of foreign principal, adding the definition of foreign principal is in there. Something my ranking member brought up is the conflict with the HB 2101, which was the ESG bill we passed last year. So we have, notwithstanding the provisions of KSA 74-4921, which is that language. And then we also have a piece on a CFIUS program, and I'm actually going to turn this piece over to the Majority Leader Croft if he wants to explain real quick just the CFIUS, not syphilis. If you want to explain that as well, this is a health committee, but go ahead, sir. The CFIUS language that we have in here too, just how that's going to work.
Yeah. Yeah, see, this is what happens when people say that back there. It's not good. So as we were going through this process, we're looking at any kind of federal review, and this is the only one that's actually written in statute, and it's actually been developed over many, many years, making it more and more inclusive, more and more strict, more and more capability in the process. And so looking at this, that was the one thing of anything that's out there. So we picked that to say, yeah, we're going to look at that. And if they've made a determination, then we'll acknowledge that determination in the process. So that's what this basically does.
And one thing when we were discussing within the last week, and I want to thank the majority leader for all his help crafting this bill and the amendments to this bill. One thing that we discovered over the last week or two was as the language was written, it would actually prevent the state of Kansas from buying Kansas produced pork from Smithfield. And that is an unintended consequence we don't want. That's obviously a huge issue. I chatted with the majority leader on that. He came up with this solution. From what I understand, the parent company of Smithfield has already been through that process. So this would allow us to continue to contract and purchase, again, Kansas produced pork from Smithfield. So with that, I do have a second. Are there any questions or comments, ranking membership?
Thank you, Mr. Chair. This might be a question for David or the majority leader. I don't know, but what's the difference? I can read the difference, but how is a decision made when to use foreign principal versus person owned by or controlled by or subject to the jurisdiction of? It seems like they are somewhat related, but not entirely. And it seems like some parts use person owned by, some parts use foreign principal.
If I may, the foreign principal piece only applies to the government contract side. The foreign principal piece does not apply to the divestment side within capers. So you'll see the person subject to, you'll see that a lot on the caper side, but the foreign principal piece with the balloon is only applicable to the contracts for goods and services piece. David, was that pretty? Yeah. Committee, any further discussion or questions? Seeing none, I will close on my amendment. All those in favor? Aye.
Aye.
All opposed? Motion passes. We're back on the bill. Do we have any further amendments? Seeing none, do we have any further discussion? Representative Lewis.
Just one question. The countries of concern are set forth. Can that change over time? And if so, how?
Yeah, so the countries of concern we're putting in statute. The only mechanism to change, add, or remove them is through the legislative process. So it would take us passing a bill in the legislature to either remove or add a country of concern.
I take that. I understand. I take you. We considered that. I mean, it seems to me a bit cumbersome to have to come back and legislate about change in, one country or the other. Is there another mechanism we considered?
We explored with the majority leader, and he may have some comments on this too. We've explored other mechanisms. The thing we wanted the most is to make sure that we have legislative oversight on this. And the only way you can get ultimate legislative oversight is by having to pass something through the legislature. There are a lot of broad geopolitical implications of adding or removing countries of concern, or as some call them, foreign adversaries. And we want to make sure at the end of the day, we as a legislature have a say in that process. Mr. Majority Leader, do you have anything to add?
Mr. Chair, that's fair. And in fact, the cumbersomeness is exactly what we want. What we don't want to do is being able to sit here and just come in, make a comment one day, and then it causes a massive ripple effect with everything that's got to be done. So we want the process to be a little bit cumbersome. So we have to build through that process to get any changes to it. That was by design.
Thank you.
Yes, sir. Ranking membership.
Thank you, Mr. Chair. I just want to make two comments on the public record. First off is I don't think that this is really necessary. I mean, I think Capers is already doing a good job, and by rule, I don't like telling Capers what to do and what not to do. It seems like they're already naturally divesting just from a natural return standpoint. Second point, and I serve on commerce too, so I've had a lot of these discussions. I appreciate the CFIUS pieces that are included.
Syphilis, but yes.
Correct. Yes. Treatable though. I appreciate the CFIUS pieces, but I think it just further underscores one of my big problems with these types of bills, and that just let the federal government do it. If we're already relying on the federal government within the state law that we're about to pass to do it, that means we're probably not the right body to have to do anything anyways. So just want to make that point. Thank you, Mr. Chair.
And I appreciate those comments. And I will say, especially on the government contracts piece, I've had conversations in the last few days with the governor's office, and it seems like they are making changes too within their policy within the governor's office on how we issue contracts. But this language kind of lines up with what they're doing as well. And on the Caper side, I agree with you on a lot of that. They seem to be divesting and doing a good job on their own. But at some point, as the sponsors of the pension plan, we have to have the discussion if we want our dollars being invested in these countries, in these companies, again, not just on security concerns, but also human rights concerns. So that's kind of where I view this at. But I do appreciate the comments and working with you on this legislation. I know we've had a lot of discussions on wording and stuff like that. So I've appreciated working with you on that. Committee, are there any further discussions? Seeing none, I'll entertain a motion. Representative Williams.
Mr. Chairman, I move to pass out House Substitute for Senate Bill 37 favorably for passage as amended.
Do I have a second? Second by Majority Leader Croft. Any discussion on the motion? Seeing none, all those in favor, aye. All opposed? Ayes appear to have it. Ayes do have it. Motion passes. Thank you, committee, for all your work in that process there. We will now turn our attention to the other business we have today, which is an informational hearing on public funds pooled collateral and linked deposit loan program modernization. We have a couple of conferees today. First up, we're going to call Shauna Wake, Financial Services for the State Treasurer's Office. Shauna, welcome to the committee. And I see the treasurer back there now. Welcome, sir.
Thank you, Mr. Chair and members of the committee. My name is Shauna Wake, and I am the Director of Operations and Fiscal Services for the Kansas State Treasurer's Office. Today, I'm just going to give you a quick update on the linked deposit programs that are held within our office. The State Treasurer's Office administers various linked deposit loan programs as authorized by you all, the Legislature. These programs utilize state idle funds and places them on deposit in Kansas banks, linking the funds to loans made by the banks to qualified borrowers. These deposits are also fully collateralized in accordance with state monies law. The deposit rate to the bank is set at 2% below the market rate as determined by the Pooled Money Investment Board. For programs dated prior to 2021, the bank may then issue the loan for 4% over that market rate, or the deposit rate, sorry. For the newer programs, the bank may issue the loan for 3% over the deposit rate. In fiscal year 2003 and 2004, the market rates were such that the deposit rate paid by the bank was set to 0 for a period spanning 3 rate resets. In 2009, that repeated. The market rates were again low enough that the bank deposit rate was set to 0. So the bank was paying 0% interest to the state of Kansas during that time period. Legislation was passed and made effective in fiscal year 2010 to put a minimum interest rate on those linked deposits of 0.5% from fiscal year 2010 through the latter half of fiscal year 2019. The market rates remained below 2.5%, leaving that deposit rate constant at 0.5%. So anytime it was below 2.5%, it just left it at that minimum rate. In 2019, the market rate rose to 2.52%, so 2 basis points over that minimum, leaving that rate 0.52% instead of the 0.5. And then dropped to record low rates through 2023 due to the pandemic. I will note that the newer programs that went into effect in 2021 have a minimum balance of 0.25% instead of the 0.5. These linked deposit programs are designed to allow the state of Kansas to invest in the state's economy while assisting Kansans who are struggling with expenses related to farming, new construction of a home, rehabilitation of a home, or running a business with a lower interest rate. Our most popular program to date has been the Agricultural Production Loan Deposit Program, with over 1,800 loans issued. This program began in 2000. It makes $55 million in idle funds available for these linked deposits. A loan issued under the program cannot exceed $250,000 and cannot be amortized for more than 8 years from the issue date. A qualified borrower may not have more than one loan outstanding at any given time under the program, and the funds received from the loan must be used exclusively for the operating expenses involved in farming. A borrower under the Ag Loan Program must be an individual, limited liability agricultural company, limited agricultural partnership, or family farm corporation involved in farming with a debt to asset ratio of 40% or greater. Nearly 30% of the program's issuance happened in the first year, with 545 loans issued. At that point, the program reached capacity and stayed at capacity for the first 9 years of the program. So from 2000 to 2009, fewer loans were issued, but it stayed at capacity. So as soon as one was paid off, a new one was issued. Over the life of the program, which is 23 years plus the current fiscal year, there have been 1,848 loans issued for a total of $268.9 million. Our office continues to make information about this program available on our website, and we continue to engage with Kansas bankers about the benefit of the program to Kansas farmers. In fiscal year 2023, with the markets the way they are and the rates changing, we saw a 400% increase in issuance from the prior year. Sounds really good. It was up 27 loans from 5 in the prior year. And we've issued 16 loans thus far this year. In fact, 2 of them were issued yesterday. So, fun fact. The Economic Recovery Linked Deposit Loan Program became law in April of 2021 and provides $60 million in state idle funds to place deposit in Kansas banks, credit unions, and or farm credit associations. Credit unions were new with this program, so they were newly qualified. Loans under this program are also limited to $250,000, but they may be amortized for up to 10 years from the date of issue. Again, they can only have one economic recovery linked deposit loan at any given time, but they could have one in the Ag Loan Program and one in the Economic Loan Program, so they could have different program involvements. And the funds received from this loan must be used exclusively for expenses that are involved in operating their business. It can't be used for personal things. The borrower must be an individual or entity operating a business primarily for commercial or agricultural purposes, with not more than 200 full-time employees. And again, they cannot be an individual obtaining a loan primarily for personal, family, or household purposes. The program started out slowly with no loans issued in the first year, 6 issued in the second, and over the life of the program, there have been 46 loans issued, totaling $6.2 million. The life of the program is only 4 years, so keep that in mind compared to the Ag Loan Program. Like with the Ag Loan Program, we've seen an uptick in issuance this fiscal year. To date, we've issued 24 deposits, up 16 from the prior year. Although the utilization in this program has remained less than 10%, so we have 60 million available and we've kept around 6 million. We've stayed on pace with issuance over the last several years with the Ag Loan Program, in that the number of loans that were issued have been about the same. The Housing Linked Deposit Program was established to provide qualified builders and developers in Kansas access to $60 million in low interest loans to finance housing development. The amounts of these deposits range from a minimum of $15,000 for residential structure to up to $2 million for a developer borrower, and loans can be amortized for no more than 5 years for a house and 20 years for an adult care home. The use of funds in this program is limited to expenses involved in building or rehabilitating residential structures or adult care homes. During the life of this program, only 18 loans have been issued, totaling about $3.4 million. The first loan was issued on July 2nd, 2008, And the last one was issued June 25th, 2012, just shy of 4 years later. And no loans have been issued in this program since that time. Feedback from the banks indicates the short amortization of the loans, along with the variable rate structure and the principal limitations, make them unfavorable. And I'm sure that our friends over at the Kansas Bankers Association will have plenty to say about that. Finally, we have our Kansas Extraordinary Utility Cost Loan Deposit Program. This program transferred the idle funds that were not used for the city utility low interest loan program in the amount of $21.8 million to be made available to eligible businesses who incurred extraordinary wholesale natural gas costs due to the extreme winter weather event of February 2021. These loans may have been issued for up to $500,000 and amortized for up to 3 years. However, no loans were issued under this program, and due to the limited scope of the weather event in February 2021, we anticipate that at this time, no loans will be issued under this program. Currently, there are 5 banks with participation agreements that can participate in all of our linked deposit programs. Although credit unions qualify for the newer programs, there are no active credit unions that are participating on these in our office. There are 13 banks with participation agreements on file in our office that can participate in the agricultural production loan deposit program and the housing loan program if they were interested. And have had linked deposits in the last 5 years. If it's older than 5 years, we consider them inactive, so we don't list them. The reason for this change is the change in terms over the last few years with the addition of the new linked deposits. The new programs have resulted in new agreements that we've made, and we didn't make everybody renew their agreements, so the existing banks only qualify for the older programs. Currently, there are 83 active agriculture production linked deposit loans totaling $13.6 million, which is about 24.79% of the program's utilization cap. They're issued by 10 banks, issued to 125 borrowers. Of those, 14 are businesses, 111 are individuals. Keep in mind that one loan can have multiple borrowers on it. And those borrowers live across 29 Kansas counties, so we're spread across the state. The economic recovery linked deposit loans, there are currently 36 active loans, totaling about $5.025 million, which is 8.38% of the total program capacity. They're issued by 3 banks to 52 borrowers. 8 of those are businesses, 44 of those are individuals who use them for their business, and they live across 13 Kansas counties. With that, I will stand for questions at the appropriate time.
Thank you so much for that, Shauna. Committee, do we have any questions for Shauna? Representative White.
Thank you, Mr. Chair. Could you explain to me how we came up with the loan limits and the length of the loans? For instance, the ag producers, $250,000 and 8 years.
The Treasurer's Office defers to the Legislature on that.
Okay, thank you.
And you can feel free if the treasurer or anybody wants to chime in on that. I think Alex is saying that he'll address it when he's up. So, committee, any further questions? General Dodson.
Thanks, Mr. Chair. Just one quick question. The phrase you used at the beginning, did you say idle funds?
Yes.
And how are those constituted? Where do they come from? And are they sitting on your desk or?
So agencies receive money and they have money in their state funds that are operated on SMART. Department of Revenue receives tax revenue that goes into the state general fund and that's held there. The PMIB has to do something with that money. So they're investing it in the background. Those are idle funds. So it's not money that's just sitting there because the revenue can spend it or you all can spend it on other things. So we have to be able to remain liquid. It is investing. This is us placing the money, buying CDs with these banks to invest in the money in the banks.
Thank you. Appreciate it.
Absolutely.
Representative Neely.
I heard you say something about the loans that we did for February of 21 and that nobody did those. Was that because there were other programs that took care of that issue? Was there an issue in how, the difficulty of getting such loans? I mean, that was kind of an emergency thing that we did to try and help cities, counties, etc. And then nobody took advantage of it.
I think Alex would be able to answer that question for you.
Committee, any further questions for Shauna? Seeing none, thank you so much, ma'am. All right, up next is the man with all the answers, apparently. Alex Orrell, Senior VP, Government Relations, Kansas Bankers Association. Alex, no pressure, sir.
Oh,
Welcome to
man,
committee.
that is tough. Man with all the questions. I don't know about that one. Maybe Kelly with all the answers, as you guys know. So, good morning, committee. Good morning, committee members, Mr. Leader as well. Good morning to you. Pleasure to be before you today to talk about a very great subject that we've been talking about for actually many years at the KBA behind the scenes about how we improve these things. But before I even move forward, I do have a few introductions. It is my pleasure to introduce Mark Schifferdecker, who's chairman of the KBA Board of Directors. I also have KBA President and CEO Doug Wareham and KBA Executive Vice President and General Counsel Kathy Taylor. And your favorite, Kelly Van Zwal, our Vice President of Government Relations, who you got to hear from Monday morning on the Uniform Consumer Credit Code. Then we also have J.W. Wells, our Ag Makers Division Coordinator and Government Relations Assistant. So you have the full KBA team here. So if I do not have the answer, I sure as heck will find somebody that does.
I think your boss would appreciate if you have the answers, though, Alex.
I'll do my best. On behalf of our team and the industry, I just want to extend our appreciation to you all so far this session. I know the hour is late and you're getting there and working on some very tough issues. And just want to say I appreciate all the work you guys have done over the last 2 months. And I know you got a lot of work to do still. And I appreciate working with you. It really is a pleasure every day. I am grateful for the opportunity to talk about a lot of different issues today. I know focusing on the modernization of linked deposit loan programs, but also the creation of a centralized collateral pool program. But there's a couple other issues I'm going to talk about in my testimony that's tied to this kind of conversation about how best do you safeguard public funds and how can the state invest back in itself. There's two things I want this committee to know: that ensuring the safety of public funds is paramount to our industry. These are taxpayer dollars. We take our diligent oversight, financial management practices, adherence to legal and regulatory standards to protect taxpayer dollars very, very seriously. Secondly, investing in Kansas carries several important benefits. And I think many of you know this, that investing locally, whether it be you as an individual or the state, can grow the local economy, create jobs, increase the quality of life. Investing in businesses enhances the financial stability. And lastly, can broaden the tax base too. You're taking those taxpayer dollars, investing it back here. There's more income tax, more property tax, more sales tax. You guys get it. So lastly, before I go on to my packet of testimony, I have a couple things I'm going to talk about here. Oh, sorry. On the first issue, on the centralized collateral program, I'm going to talk very briefly on that because I do have a real life banker here that does these type of loans and works with many municipalities across our state in Kansas and in Colorado. Which leads me to page 3 of my testimony. You'll actually see a handout from the Nebraska Bankers Association regarding their single bank pooled collateral program. Nebraska has a program like this. Colorado has a program like this. South Dakota has a program like this. Iowa has a program like this. The goal of this is to improve efficiencies in this world of pledging securities and making sure those funds are safe. It also can free up capital. Because when you're pledging those securities and you do it so many times, you times that by 40, all of a sudden you can find yourself very overpledged and there's capital tied up that cannot be lent out in your communities. And so you can do those, you can free up both of those things, improve efficiencies, free up capital, by ensuring the safety of those funds too. We think the creation of a program like this that Mr. Schifferdecker is going to get into will actually make the process safer for public taxpayer funds. I know there's probably a bill going to be introduced this year. I don't know if it was introduced yesterday. It was. And we're going to be looking at that later this year. It's not a this year item. This is kind of trying to talk about ways and do some research for next year. Moving on to a separate issue on page 4, the linked deposit loan programs in particular, I do want to give a shout out to Shauna and the treasurer's team. They do a fantastic job. Got to work with Shauna during the pandemic of helping establish the economic recovery loan program. And they do fantastic work for our state. But they are kind of handcuffed a little bit on some of these items. You're talking about where the rates and how these limits were set. They were set by the legislature. I think many times in this building, we get too many cooks in the kitchen and we think, well, we got to put this restraint on there. We got to put this restraint on there. You know, when we initially proposed the economic recovery loan program, we wanted it to be $1 million loan limit. We got significant pushback from some folks on that bill or on that piece of it. It's well intended. I get the comments, but if we want these funds to work, we have to free them up a little bit so that they can be deployed. You know, just using the big three, the ag production, the economic, and the housing, you know, now my numbers are a day old than Shauna's, but 156 million available at 175 million, you know, that's 10% utilization rate. We can do better on that front, but we got to be able to look at these terms in depthly and figure out what works and what doesn't. Which takes me to page 5 of my testimony. You'll see a bill, Senate Bill 736 from Missouri. It's always good bringing up Missouri legislation in the Kansas Capitol. I love your faces when I do that. But Missouri has figured out a way, they call it MOBUCs, and they have figured out a way to deploy their funds in a very positive manner. And just this year alone, they're taking their linked deposit loan programs, increasing the availability of those from 800 million to 1.2 billion. They don't have as much restraints on their programs. They don't have as much of the loan limits. For instance, the ag production linked deposit loan program has a limit of 250,000. Doesn't even buy you a tractor. I know that limit was set way back, but we got to increase these limits and make them more available. But just look to our neighbors to the east. Once again, this is informational. There's a significant amount of research we still have to do on our end on this front too, but it's working over there, and I think it can work in Kansas too. Moving on to page 9 of my testimony, I am going to take the rest of my time and opportunity to talk about a few other things here because we're talking about taking taxpayer dollars, safeguarding public funds, but the state investing back in itself. On page 9, you'll see an asset allocation from May 31 of 23. There's a reason why I'm going back of the state's pooled money investment board current holdings. Back then we had 9.6 billion, but you look down the asset allocation, Kansas bank CDs, 0.3% is in Kansas bank CDs. We have nearly 10% in Canadian banks, large major corporations as well. And we think that number should be higher. None of what we're talking about is a mandate, by the way. I want to make sure all of these proposals we're talking about, they're going to be options, their availability. Moving forward to this year, if you look at the most recent asset allocation on page 11 of my testimony, you'll see the Kansas bank CD rate is up to 0.44%. That's now 44 million when it was 28 million. And I do have to give a tip of the hat to the state treasurer and the pooled money investment board because they were talking about 30, 60, 90, some hot money, quick money. The treasurer, who has significant experience in the investment world, had the foresight to go out and talk to our industry and say, what will work? Talk to people like Chairman Schifferdecker. It's like, well, we need longer terms. And he implemented, the pooled money investment board implemented a 12-month option just last fall. And so we do believe that is the reason for the uptick here. But there's some other things that are kind of restraining them too, that are in statute. Some of these statutory rates are set by you all of what Kansas banks have to pay for these deposits, which takes me to page 13 of my testimony. You'll see the municipal investment pool rates. Municipal investment pool is an option that local municipalities can go to place their funds and invest them. Kansas state law requires local municipalities to put out those funds to their local financial institutions first. There is a discrepancy in the rates here. This is what the MIP, the Municipal Investment Pool, offers to the local municipalities. If you go to my next page of my testimony, you'll see page 14. you'll see what the statutory rates for banks. The statutory rate for banks is actually 50 basis points higher than what the MIP offers back to the local municipalities. So Kansas banks are actually having to be charged more for their deposits than what the MIP even offers the local municipality. I think there's an argument based on my comments earlier on local investing and investing back in yourself that I think these rates need to be looked at. They sure as heck shouldn't be different. They should definitely be level, but that would require a statutory change to bring that in par. Going back to the PMIB piece real quick of, if we had, right now we got $44 million in Kansas bank CDs. You just had 10% of what our current holdings were that were in Kansas banks. That's $1 billion, a little over $1 billion. The economic theory of a dollar rolling over a community many, many times, 7 times, that would equal $7 billion economic investment back in the state. I think that's a very strong bipartisan message that I think many can deliver back to your constituency of we're trying to do the best we can to invest back in you with your taxpayer dollars. On page 47 of my testimony, you'll see an excerpt from a study that we commissioned back in 2006. It's called How Public Funds Investment Policy Impacts the Kansas Economy, Analysis and Adaptation of Previous Research Prepared for the Kansas Bankers Association and the Community Bankers Association by a gentleman by the name of Dr. John Wong. Dr. John Wong was the head consensus revenue estimator and economist with Wichita State University. He commissioned this study back in 2006, and I'm going to read you a paragraph here. The function labeled state gross total indicates the relationship between interest rate differential and the overall economic impact on the state as a whole, including the gain in economic activity and income, sales, and property tax revenues of maintaining local government deposits in Kansas financial institutions. Based on the given assumptions, the state as a whole would experience a gain in economic activity and tax revenues from maintaining local government deposits in Kansas financial institutions, as long as there's less than a 31.5 percentage point differential between the Kansas and the out-of-state investment rate. This is where you kind of have a global fiduciary mindset and a singular fiduciary mindset. As fiduciary, you're making sure to take care of your client, your individual, make sure they get the biggest return possible. Does that same theory also apply to the state of Kansas? I think you need to take a global fiduciary viewpoint on the state side, because you're not just getting that extra 25 basis point on the open market. You're getting that one time. You invest that back locally, you're getting that return multiple times. So I think we just need to look at the overall strategy here of what we're doing. And I'm looking forward to taking a deep dive into this issue maybe later this year, because if you take the pooled collateral, the linked deposit loans, the municipal investment pool rates, the creation of a centralized collateral pool where a bill was introduced, there's a lot of things we can do. And I would actually respectfully request an interim study on this exact issue. I know I'll get to work with Melissa a lot more. We've done that in the past, and she does a fantastic job. But I think this does deserve a deep dive. And with that, Mr. Chairman, appreciate the opportunity, appreciate the committee's work, and be willing to stand for questions at the appropriate time.
Thank you for that, Alex. We'll hold questions until the next conferee's up. And with your request to an interim, good thing we have a member here today that can help make that happen.
Worked out really well.
Yeah, look how that works. The bill Alex was referencing, I did introduce yesterday in tax. I don't have a bill number for it yet, but it did get introduced to help keep this conversation going. So thank you for that, Alex. Up next, we'll call Mark Schifferdecker. Mark, well, yeah, hey, last name's Hoheisel, buddy. It happens. Welcome to committee, sir.
Thank you very much, Mr. Chairman and committee members. It's an honor to be here with you today. My name is Mark Schifferdecker. I'm the chairman, president, and CEO of GN Bank in Girard, Kansas. We serve since 1918. We've served 12. Well, we haven't served them all since 1918, but 12 rural communities in Kansas and 2 in southeastern Colorado. And I'm also here on behalf of the Kansas Bankers Association. I'm serving as the chairman of that association this year as well. And I'm here to testify specifically about the centralized pool collateral program that Alex referred to. Before I do that, I'd like to respond to Representative Neely's question about the economic fund that was set up and why banks didn't use that. And just three little letters, I would say, is the main reason, PPP. So when that was set up, it's a great program. But then when the PPP program started, we were just flooded, as you might imagine, with funds. Our bank grew probably 25% in size with all those funds, which was a great program and a great program for us. But that's the main reason why we as Kansas banks didn't take advantage of that, because of those federal programs. So, but let's get back to the collateral pool. I think this is really important to get the conversation started. I realize this is probably a next year thing, but as a community banker, I think this is a very, very important issue. Looking at this, and if done right, I really think the centralized collateral pool will result in efficiencies, both for Kansas banks, but more importantly for the public entities, because it's a much more efficient process and a much safer process of public funds as well, which is very important. At our bank, we are honored to serve 42 Kansas public entities, whether they be cities, schools, counties, Indian tribes, watershed districts, and the like. And it's a pleasure to serve them. And so we really understand what it means to give back to the local communities. And I think a centralized pool system would enable us to unlock capital, as Alex said, and invest even more back into our communities, which is important to our bank. So let's just give you an example. Currently in Kansas, to secure a public deposit, of course, there's $250,000 of FDIC insurance, but any amount over that, the Kansas bank must either pledge investment securities, typically be treasuries or agency securities, or purchase a letter of credit from the FHL Bank, Topeka, to secure that deposit. And so it's pretty simple. But what we do is, of course, we always overpledge, because particularly a lot of those funds are in transactional accounts. Balances fluctuate every day. So we need to be 100% pledged 100% of the time. So we monitor that every single day to make sure we stay in compliance with what we need to do to pledge those. Again, simple enough, but in our example, we have 42 different public entities that we bank. Most of those have multiple accounts. It's not uncommon for Crawford County to have a dozen different accounts in our bank. So you're monitoring every single account at the entity level and pledging securities. So it can become quite cumbersome to do that. And so in page 2 of my testimony, I've just given a real live example of our bank. And I took one of our markets, and there's 12 public entities in that market. And they have, as of the date of this, about $17.5 million of funds in our bank. Now, of course, you take out the FDIC insurance, and we have to pledge about the amount below that. But with those investment securities, we are overpledged almost $5 million, which is great. Glad to do that. But it does tie up that capital that GN Bank cannot invest back into our local communities, which can be difficult. And that's just about a quarter of the relationships that we have. And I kind of look at it as kind of a blunt instrument, all this pledging, because you're taking treasuries that they may be in $1 million increments, and you're trying to pledge those every day. And so you're taking these bonds, and it's a very blunt object when you have to granularly pledge those to each entity. And so the advantage of a centralized collateral pool is basically you'd have a repository, and we'll talk about these other states, that we would pledge the public entities would work along with the banks, and the central collateral pool we would pledge one place. So for our 42 entities, we'd pledge the aggregate amount and overpledge like we typically do, instead of pledging to 42 separate entities. And so as we talk, the state of Colorado, we have 2 locations there in Colorado, and they have what they call the Public Deposit Protection Act, the PDPA, that the Colorado Division of Banking administrates. And so we've got about a dozen entities in Colorado that we bank with, and we pledge into that PDPA, and then they work with each individual public entity to work on that. Much more streamlined, much simpler for us. Even more importantly, it's much simpler for the municipality, because they're dealing with one entity. They may have relationships with 5 other banks, And so they're dealing with all the banks through this centralized collateral pool. Also, Nebraska, as Alex mentioned just a couple of years ago, set up in their programs called the Single Bank Pooled Collateral Program that is administered by the Nebraska Banking and Finance Department. And as I understand, Doug and I went up to Nebraska just a few months ago and talked to them, and it's working quite well there. So in conclusion, thank you for your time. I think this, if designed right, the centralized collateral program would really result in streamlining the process, not only for community banks, but more importantly for the public entities. And I think it would really safeguard the system, and be happy to talk about that a little bit more. And then finally, it would free up capital for community banks to invest back in their communities. I really appreciate your time today. Thank you very much. And I would stand for any questions if you have them.
Thank you much for that, Mark. Committee, do we have any questions for either Mark or Alex? Representative Williams.
Thank you, Mr. Chair, and thank you, Mark, for being here today. I do want to kind of talk more about the centralized collateral pool and, what Nebraska has done, what Colorado has done. We've previously heard about, we've had a bank failure in the state of Kansas. So if we were to move to this centralized collateral pool, how do we ensure that programs like that, ensure our public tax dollars are safe, protected, and insured?
Yeah, that's a great question, Representative Williams. And I really think if designed correctly, as Colorado and Nebraska and some of these other states have done, this will actually result in better controls, better safeguards. And the reason I say that, of course, is banks. We get audits, we get regulatory exams, we have internal audits and all that, and the cities and counties do the same. But this would be an extra layer of security, particularly for smaller banks. And unfortunately, the bank that you referred to is a smaller bank. And so you've got another set of eyes working alongside the banks, not taking the place of the relationship, but working alongside the banks and the public entities that verify. You have to pledge into that. They're checking that daily. So not only am I, as a community bank, not only is the city or the county checking that as well, but you've got this entity in the middle. It's their job to make sure that on a daily basis those funds are protected. So I think it's a great thing, and that's why I say I think the safeguards are even better. Not that what we have now is wrong or broken, but the safeguards are even higher than what we currently have. Thanks.
Committee, any further questions? General.
Thanks, Mr. Chair. Thanks for your testimony. I appreciate it.
Sure.
Great idea. When we're talking about this entity, can you give us some idea of what the shape of that is and maybe how Nebraska and Colorado have done that?
Yeah, that's a great question. And there's not a one size that fits all. Colorado, that I'm the most familiar with, just because we have banks in Colorado, it's been around for probably 20 years or longer, as long as I've been in Colorado. Theirs is a little bit different because it's more of a mandatory program where all the banks, if you're going to have public funds, you participate in the PDPA, and the public entities have to work through the PDPA. So it goes back, and I don't know what the genesis of that was, but it's more of a mandatory program. And it works very well because our accountants, when they come in, they have agreed upon procedures. And so even our auditors have to look, back to your question, have to test what we've done. And I'm sure they have the same thing on the other side as well. The Nebraska program is a little bit different. It's more of an optional program. And so you're not forced, the municipalities are not forced to participate in it, and the banks are not forced. Let's say I'm a bank in one location and I only bank 2 municipalities. Well, perhaps it's just as easy for me to work directly with those municipalities versus our bank where we've got 42 in Kansas. So there's lots of different shapes. Ohio looks a little different as well. So I think there's going to need to be careful and thoughtful discussion and work done to make sure we come up with a program that fits Kansas and fits our entities the best. So to answer your question, there's a lot of different models out there, and we've been studying them as far as the KBA. And I think there need to be a lot more work done to figure out what is the best model for us.
Just one follow-up. Does this entity have a separate board?
Yes, it depends on, again, the model. In Colorado, it's own entity, and so it's run by the Colorado Division of Finance, much like the Kansas Bank Department. But then they have oversight as well, and I can't speak to the specifics of that. Nebraska, as I understand it, is set up a little bit differently than that. And Doug, you might be able to speak to that, but they're all modeled a little differently. But I think it would be important to have good oversight. However, if we pursue this in Kansas,
Thanks very much.
That
Appreciate it.
thank you,
Committee, any further questions?
thank you.
Alex, you got something to add?
If I may, General Balton, appreciate the question. I do want to address the Nebraska one pager that we put in here. There are states that also have allowed for a private entity to contract with. And that's what Nebraska has done actually with the Nebraska Bankers Insurance Group, Nebraska Bankers Association. I want this committee to know we are not proposing that the KBA run that program. But that is, so there's options there. There's an option to have a private entity run it. There's an option to have the state treasurer run it. There's an option to have the state bank commissioner run it too. So there's multiple different ways. But I just wanted to make that very clear that these are options that are out there. And once again, we would definitely be more in favor of the option route and not mandating people have to participate in these things. Once again, we don't want to put any more restraints on people. We want to set up programs and processes that work great. And the bill was introduced yesterday was more deemed off the Nebraska version of allowing different options. The state can run it or they can contract it out.
Any further questions? Seeing none, I want to thank Alex and Mark both for presenting today, and Shauna with the Treasurer's Office. As you can see, committee, this warrants further discussion this summer, and I look forward to working with all the parties on this over the summer, and perhaps even an interim committee. We'll see. So we'll go ahead and just close that informational briefing, and we'll move to our one bill hearing today. It's a hearing on SB 345, enacting the Commercial Financing Disclosure Act. And we'll turn it to David for a brief overview.
Thank you, Mr. Chairman. Senate Bill 345 would enact 5 new sections of law that would be known as the Commercial Financing Disclosure Act. Section 1, as the name gives the name of the act, and then there's some definitions for terms throughout the act, including commercial financing transaction, broker, business purpose transaction, provider. So Section 2 starts up with the before consummating a commercial financing transaction, a provider shall disclose to the business the terms of such commercial financing transaction. The providers are required to disclose the total amount of funds provided to the business. Under the transaction, the total amount of funds dispersed to the business, if less than the amount provided, the total amount to be paid by to such provider, the manner, frequency, and amount of each payment, and a statement of whether there are any costs or discounts associated with prepayment of the transaction. Section 3 lists exemptions from the Commercial Financing Disclosure Act. Section 4 provides certain prohibitions placed on brokers who arrange commercial financing product transactions between a third party and a business in the state. And then Section 5 is the penalties section of the act. Violations of the act be punishable by a civil penalty of $500 per violation, but with a maximum of $20,000 for all aggregated violations. But if somebody has received a written notice of a prior violation with the Attorney General, that civil penalty would be $1,000 per violation, with the total a maximum of $50,000 for all violations. A violation would not affect the validity of the underlying agreements. This also does not create any sort of private right of action against a person based on compliance or non-compliance with the act. And the sole authority to enforce compliance with the act is vested with the Attorney General. The Senate made no amendments to Senate Bill 345, and the bill was passed by the Senate on a vote of 38-2 on February 22nd, 2024. I can take any questions, Mr. Chairman.
Thank you, David, for that. Any questions for David? Seeing none, thank you, David, and I will co-op Representative Neely's question with the Attorney General's fiscal note and say ditto to the same explanation I had last week. So it seems to be a theme. All right, committee, we will go. We have one proponent today. It's Catherine Fisher, partner at Hudson Cook LLP. I believe she's joining us via WebEx. Catherine, are you with us?
Hi. Yes, good morning, Chairman Hoheisel and members of the committee. Thank you for the opportunity to testify today in support of Senate Bill 345. My name is Kate Fisher, and I'm an attorney with the law firm Hudson Cook, and I represent the Revenue-Based Finance Coalition, a group of responsible providers of financing to small and medium-sized businesses across the U.S. and in Kansas. Revenue-based financing is not a loan, it is an accounts receivable purchase transaction. Thousands of businesses across the state of Kansas have used the revenue-based financing product to grow their businesses and deploy capital. Our member companies have originated approximately $36 million in needed financing to nearly 2,000 businesses in Kansas. Senate Bill 345 would require non-bank providers of commercial financing to disclose 6 critical pieces of information to their customers: the total amount of funds to be provided, the total amount of funds to be dispersed, the total amount the business will pay back, the total dollar cost of the financing, the manner, frequency, and amount of payments, and a statement of whether there are any costs or discounts if they pay off the financing early. Requiring non-bank commercial financing providers to give these disclosures will codify best practices and help eliminate bad actors. You may hear opposition because these disclosures do not include an annual percentage rate, also known as an APR. APR is a consumer credit disclosure that measures the cost of financing over a specific term of required payments. 7 states have recently passed commercial financing disclosure laws, and of those 7, only California and New York require an APR disclosure. The other 5 states have rejected APR because not all commercial financing transactions have a specific term of required payments. For example, accounts receivable purchase transactions do not have a set term for repayment, making APR a misleading disclosure. Senate Bill 345 would ensure that Kansas small businesses receive accurate information regarding the cost of commercial financing. Thank you for your time, and I'm available if you have any questions.
Thank you so much for that, Catherine. Committee, do we have any questions? I see no questions. Look like you did a great job explaining it to us, Catherine. Thank you so much. All right, committee, we have no other proponents, opponents, or neutral today. Is there anybody else that would like to speak on Senate Bill 345? Seeing none, we will go ahead and close the hearing. And with that, we are concluded for the day. We have 2 bill hearings Monday. Just a heads up, committee. I'll leave it to the will of the body. Monday, we have 2 options. I plan on working this one Monday as well as hearing the other 2. What we can do is after we hear the other 2 bills Monday, we can just turn around and work those Monday. I don't think they're controversial at all. Or we could come back Wednesday just to work those bills. But if we work on Monday, we can take Wednesday off. We don't need to be here Wednesday. We can be wrapped up. So think about that. If you have amendments, if we do work on Monday, if you guys read the bills and have amendments, go ahead and prepare them for Monday. But if it's the will of the committee, Monday we'll hear those 2 bills and just work on Monday and then be wrapped up, and we won't have to be here Wednesday. So again, I'll just leave that up to the will of the body when we come back Monday. So have a great weekend, and we'll see everybody next week.